Hello, 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 everybody. Well, seems like I've seen everybody a lot today. How is everybody doing? Hello, Amit. Hello, George. Let's see. Amit's proud of himself. Put on a trade back in early August. Spy 420s for Jan 2023, 15 contracts, and took off at each downside target. Took the rest off today. Okay, so you followed your plan. Good job. Hello. Hello, Patrick. Just gave myself plenty of time. Didn't expect the markets to move so fast in 6 weeks. Well, there you go. Hello, AB. Hey, AP's World. Hello, Sashi. Hello, everyone else hiding in the background. So we had the Fed rate hike. Again, I came on for that. I know some people attended live. That's a little more challenging than I thought it would be. Hey, Connor, I don't know if it was beneficial to anybody, so you can give me some feedback, but we were live, at least not for the presser. That would have been way too much to try to focus on live stream, markets, and what was being said. But we at least got the rate hike out of the way. We will have Bob on in a second to get his take on it. If you are new here, please do consider subscribing, ringing that bell, and hitting the like button. Longer term subscribers, leave some comments and like the videos. All right, Ted thinks it was a great real time session. What day is it, Chris? Oh, it's Hump Day. Fantastic. With that, I will bring on Bob. Here we go, Bob. There you go. I can't hear you. You're on mute. Hold on, Bob. Guest. It says guest has muted themselves. Bob has. I can't unmute him. Hold on. 1 second. 1 second. Let's see. All right. Where's Dum Dum Style? It's Mike and Silent Bob. Oh, maybe he's still on the phone. I thought he might be here yet. He might be still on another call. So let me all see when he is. There we go. Today was epic. Classic bear. Let's not again. I'm not even going to refer to these. We had just reversals. Hello, Christoph. So we had the 75 basis point. All right, it looks like Bob's can talk now. There we go.
Did you come to
Bob.
me, Mike?
All right, there we go.
If you came to me, I told you before the stream started, I had to take this call really
Yeah, I
quick.
know. I didn't know if you were still on it. I couldn't see your thing.
Yeah, I'm
All
not
right,
anymore.
Bob's here now.
And I am not Silent Bob. Ted, you and I are friends now after that Ferrari comment a few weeks back. So be careful.
All right, so you watched you watched the rate hike and the presser and
Yeah,
everything, and then
yeah.
I want your take on Elizabeth Warren.
Why do you have to do it? Why?
Hey, Powell is driving millions of people to unemployment.
I mean, that's not wrong, to be honest. If he gets rates approximately where I think they're going to go, somewhere around 4.5%, 5%, you're talking about maybe 1.5 million people. But I mean, this is their fault. This is all the stimulus checks that shouldn't have happened when they happened. They just, again, it's piling on. You know, you remember after the financial crisis. I don't know how many of you are old enough to remember this. I know Tom's not, but um, after the financial crisis, there was Barney Frank and Chuck Todd with the Chuck Dodd, rather, Charles Dodd, whatever his name was, with the Dodd-Frank regulations, and they basically had pushed banks into this predatory lending to give people who probably weren't qualified, to figure out a product to give people who weren't qualified for a mortgage a mortgage. That's where the no docs came from. And yes, they took advantage. Absolutely. They took advantage of mortgage brokers making huge fees, no doubt about it. But Congress bore a lot of the brunt of the blame for what happened in 2008. When I see things like this out of Elizabeth Warren, I think she's heading it off at the pass, quite frankly. And I didn't mean that as a Pocahontas joke. I really do think she's just kind of getting out ahead of it, saying, hey, not our fault. I warned you guys back in September of 2022. The Powell was pushing millions of people into unemployment. It's the Fed's fault. And Republicans agree with this Fed. Keep that in mind. They're putting you on. It's crap. She's ridiculous. She's absolutely ridiculous.
Before we get in your take on, I mean, the hike, and we'll put up the dot plot and everything else, but what's the alternative? A horrible long-term stagflation? What does that do to millions of people?
Yeah, that's very much, and we've talked about this a lot on this live stream. That's very much the worst case scenario. It hurts the most people the most is stagflation. It's worse than a depression, honestly, from a perspective of how many people it hurts and how long it can last. It's horrible. It destroys people's lives. It destroys people's savings. It destroys everything. Prices are going up, and the economy is either stagnant or shrinking. So prices are going up. Right now, we have a strong economy underlying, relatively strong, with prices going up. So while prices are going up faster than wages, wages are going up too. The thing the Fed has to do, and Jerome Powell kind of talked about this, although I think he was probably giving the Fed too much credit for the previous 10, 12 years, maybe. But he said, we have the stable inflation, which I really think is due to technology, not due to any actions by the Fed. And this sort of productivity gains and deflationary nature of technological advancements. But from that perspective, he said, having inflation under control is really what allowed us to have a 10, 12-year bull market. And similar to Elizabeth Warren, he's not wrong. It's a little generous to say that it was simply because of 2% or less inflation, but it was a part of it. It was definitely a part of it. So from that perspective, I mean, Elizabeth Warren is she's a moron, man. When it comes to banking and the economy, she's literally brainless.
So we had 75, of course, today. Right now it's 75 baked in, at least at 62% for November. Remember, the next hike isn't until the 2nd of November. I got the dot plots here.
Yeah.
That's
moving out, aren't they?
Huh?
Moving out.
I mean, they got this. You have one little low outlier here at 3.75 to 4 for the end of 2022, 2023. But if you look here, it's really between above 4 and especially concentrating at 425 to 450. 2023, there's no cuts. You don't start seeing cuts till 2024. So
and even 2025, the range is between 250 and 3%, which is where we just came from after a few 75 basis point rate hikes.
Who's this, by the way, for 2025?
I don't know. Probably Bullard. Probably Bullard.
Maybe he was here, or maybe he was here. No, we're doing a 25 basis point cut by 2025. But if this didn't destroy the narrative of the any pivot anytime soon, not let alone a pause, but a pivot right here. If that's not destroyed, then I don't know what will destroy it.
Right. I mean, I'm not hearing anybody talk about it anymore. I don't know if you are, Mike, but I'm not hearing anybody talk about pivot anymore.
No, but
Coco, I'm wearing the green shirt I promised you, and I should have made you promise not to say stupid shit, and I would wear the green shirt. But apparently, that's too much to ask.
we've got stupid crap going on in here. It's I don't know how even on a red day you say we only go up. I just
Well,
don't get it.
dude, pull up the Dow. Put up a Dow daily. Down 6 of the last 7 sessions. Stocks always go up.
No, they go, well then it's going to be
6 of the
all.
last 7.
There's your Dow. At least the Dow futures.
Yeah, 6 of the last 7 are lower.
They always go
Always
up.
go up.
They always go
They
up.
do nothing but go up.
Even if I put up a weekly, it's
Nothing
not
but
always
up.
go
Look
up.
at that. It's all up.
It's all up. If we squint really hard, every bar looks like Bob's shirt, green. Yeah, I don't. Can we at least be honest with ourselves?
No,
Unless you're wearing some seriously interesting glasses. So what I thought now, I thought the press conference sort of was off to a shaky start, but it ended like with it actually ended a bit early.
It did. It ended early, and I think toward the end, Powell realized that he was pulling away from the stern tone, and when he got out those last statements to say, "We'll move until inflation reacts, and our movements will be enough." He goes, "They will be enough." In
Which
other
I
words,
thought was
they'll go to
like
15% if that's what they have to go to. That's what he meant by that.
yeah.
Now, obviously, they won't have to go to 15%, but that's what he meant by that. And I think that's why he ended it. I really do. Because I think he realized that he was drifting. Reporters were trying to push him to say recession. And when he wouldn't say it, I think the guy from Bloomberg, Mike something or other, I forgot his name. Anyway, he asked a question and he basically pressed. He was trying to say, Powell almost said recession. He almost said it. Then he said, there's likely going to be, some difficult times. It was freaking hilarious.
Yep.
Mike McKee, that's his name, Mike McKee. I think he was the one who tried to push the hardest. And he's actually come on and complained that they don't always call on him. And sometimes when they call on him, they cut him off pretty quick. And that's pretty much why, because he was pushing. Mike McKee physically looks like one of those Irish drunk dads from my old neighborhood with the blotchy red nose and the suit that doesn't fit right. But he's a pretty smart guy. And he was asking, he's pushing. Powell almost said it. But one of the most, I think, telling statements by Jerome Powell is we have to get inflation behind us. And I wish there was a painless way to do that. There isn't.
There isn't.
I mean,
Well,
that's
here
pretty. That's a
we got it summed up.
low trend growth.
We're not a recession. It's just below trend growth.
Yeah, I agree with what Christoph just said, by the way.
Let's put it up there. I feel he's mindful of last three FOMC press conferences comments caused markets to rally, and he wanted to avoid it at this time. And they started off. We got that bounce. We got the bounce when the press conference started. Hit some pretty key targets, and then just. I think then people realized, all right, he's not joking.
Nope.
They're not easing up. It's.
Yeah.
So, yeah. I mean, I don't know how much firmer they can get at this point.
I tried to get Steph Pomboy to do a quick short with me because she's got a really good earnings recession call, and she has detail behind it and the whole thing. And I think it'd be interesting to you guys. So I reached out to her. I'm like, look, we got to talk. I got to get this earnings recession, specifically the earnings recession call on tape. And she says she's got problems because she lives part-time in Colorado, part-time in Florida. And her car shipper is getting her car. It's a whole thing. But she said she'll definitely do it with me next week. So or maybe later this week. So I'll get you guys a video of her explaining her recession or earnings recession call, which is the kind of thing that's really going to hit equities if it actually comes to fruition. Mike and I talked about a small rally today. I thought it would be more than what we saw, to be honest. I really did. But I think the press conference, as Mike so aptly put, it ended quickly and it ended hawkishly. And I think that's why it didn't last. That's my call on it anyway. But yeah, it went the way we thought. I think he was really still, as Christoph said, I don't know that he was like giving a crap if the market rallied. I think he started to get a sense of the idea that the market didn't believe him, and this is a true thing. Mike and I've talked about this a lot in our careers, that once uncertainty is gone, markets will price differently. Markets always price uncertainty, but with sell-offs. But if uncertainty goes away and you have certainty, even if the certainty is of higher rates or of lower earnings, markets can actually price it in and then adjust. And sometimes that adjustment is higher, depending on how much uncertainty they were pricing in the first place. But I think Powell was really, I think he ended it at the right time, because I think this is the reaction he'd hoped for.
Let's see. Other thing, yield curve.
Yeah. Holy crap. So you put up your chart. This is the lowest ever, isn't it? This is the most inverted ever, if I believe, in the 210. Since I've been keeping records, the lowest I'd seen is 48. And that was in 2000, 2001. It was after the tech bubble burst. I think getting down to, so we got down to 54. I don't know where we ended up.
We ended up at negative 52. 52.7.
I think that's the lowest close ever.
I know it's really close. I mean, I don't have enough data on here to go all the way back. I mean, based off of, the lowest here, and this isn't exactly accurate because it's based off CFD.
That's closed, right?
But yeah, the low was 50. The lowest on this chart is minus 51.1. That's the lowest low. The lowest close, that was 46.9. That close.
All right, so we already broke the lowest low then.
Yeah. Today. We're lowest based off what's the data on this chart.
Yeah.
Okay, so
I'm pretty sure it's the lowest ever.
That's been taken out.
Yeah, I'm pretty sure it's the lowest ever. I haven't found a source that showed me anything lower than what your chart showed. But for the record, I go off of closes. I don't.
And this is the lowest closes on the chart. So
yeah, I don't do it. I don't go off of closes because I want to know, like I'm dismissing the low of it or anything. I go off of closes because that's the reliable data I can find from multiple sources, looking at cash, looking at CFDs, etc. That's what I can see. So, but it's the lowest ever.
Any thoughts? Oh, we had a huge rally in the dollar index and a pretty substantial reversal with the
market.
Huh?
I'm sorry, go ahead.
We were rallying and then a big reversal. This after the press conference started. I mean, this was with the cut decision. And after the press conference, I mean, a little peaky going in, then press conference, and then a boom, and then the snapback. But there was a fair amount of selling pressure for a while in the dollar index, and then it recovered.
Yeah. So again, I don't think Powell had his phone out with the dollar index on it, but I think he certainly noticed that. I mean, if you look at the daily, is that the daily on the dollar index? Yeah, I mean, there's clearly a pullback from the highs, but still higher close, right?
Yep.
And we've got the Bank of Japan tonight. We've got the Bank of England tomorrow. I think the Bank of England meeting is the most interesting to me because man, I think they got to front load the hell out of it because of how bad the winter may be. So I think they got to front load the hell out of the rates. I see 100 out of the Bank of England tomorrow. And it was funny because if you look at, can you put up a British pound, Mike, whether
Sure.
it's futures or sterling US dollar? I don't care. If you look at what happened to the sterling US dollar, which one are you going to put up?
I'll put up the futures.
Okay. Let's put up the futures on my chart here. If you look at what happened here, we dropped to
Oh, it's
112.58.
I mix up the. Here we go.
That's right,
There we go.
112.58. To put that into context, I believe that's the lowest since like 1985.
Uh, let's get to that monthly chart. I don't know how much data is
You
on
look at
there.
the futures, you got to go to the, if you're going to go back and see if this is right, you got to go to the sterling US dollar. You got to go to the cash because they don't have enough on the futures. But if I'm looking at this right, let me move my horizontal line.
Let's see. Here we go. This is the highest since 85.
Yeah, crazy. So a lot of that happened post FOMC. Um, so from that perspective, I think that also pushes the Bank of England into 100. Um, so we'll see. I mean, the last thing I noticed, and I did it on my commentary that I do for the CME this morning, I said that most people are discussing between 50 and 75 for the Bank of England. I think with the exaggerated move here, you're seeing the probability of 100 being priced in post FOMC.
Oh, there we go. And I didn't finish with my euro, but I was expecting the continued drop in the. I just have to check. Then we're going to get to a crude question. Not.
Let's talk crude oil.
I'm still waiting for slightly lower prices in the euro. It hasn't hit my next target yet. Let's get to crude though. Christoph asked a crude question. We can't just focus on the Fed. Bob, what do you make of crude selling off after first rally on the back of Putin's war comments? So that's been lost on the Fed day, but we had the Putin presser. The Putin presser.
So the interesting thing that I took from the Putin presser, I don't know why that makes me laugh, what a Putin presser, was this particular quote. Russia will use all the instruments at its disposal to counter a threat against its territorial integrity. And that's this part that bothered me. This is not a bluff. Maybe it's a bluff. Obviously, we've seen elections. Actually, I don't want to say obviously to this. I'm going off of talking points from other sources, but basically everyone thinks that this referendum to annex the territories that have already been under Russian control is going to be fixed and it's all going to be approved. I mean, I don't want to be like a demonizer of Russians or a demonizer of Ukrainians. I don't freaking know. But if it is approved, Russia, and we talked about this yesterday, that means Putin can now use anything at his disposal to defend Russian territory from an invasion, which is why strategists say he's doing it in the first place. So, if that's the case, we're all taking this as a nuclear threat. I think that's the right way to take it. I really do. Imagine you live in those territories. Okay, imagine that you live in those territories. You get annexed. Ukraine comes in and theoretically invades, and then Putin just sends all kinds of firepower to where you now live to fight that off. And I'm not saying that's where he would drop a low-level nuke. It'd probably be somewhere more deeper into the Ukraine. But then he would go and say that this is what I was forced to do because they invaded my sovereign territory. You saw the vote. And I think that is lost. Now, I will say that I said this yesterday from a perspective of crude oil, macro events are dominating right now. And we've seen that happen in the past and we've seen it end badly. But right now, the recession narrative, as evidenced by this record low twos, tens inversion, is too strong. And it's just pushing demand way too low. We all know the price caps aren't going to work. Russian crude oil is still going to be in the market. There was somebody that asked me today, what if Russia, oh, it was Ben Lichtenstein at TD Ameritrade. What if Russia pulls supply to hurt the EU, crude oil? They're not. I don't think they are. I shouldn't say they're not. I don't freaking know for sure. But I think that crude oil is funding the war. So as long as they can sell it to China or India at whatever price they want to sell it at, they're going to continue to do so. They're not going to pull it off the market. They might pull it from anybody else but China and India. But China and India combined use more barrels per day than Russia produces. Now, there's obviously different grades, and it doesn't just work that way. But on a net basis, their treasury has gotten much more full during the war because of the spike in crude oil prices. Their treasury has not gotten lighter based on official documents. So I don't necessarily, I'm still short crude oil. We got a rally after the Putin comments, but then the macro, that's what that early rally was. That wick you see there on the chart that Mike put up, that was the Putin rally, and it just wasn't enough.
Well, what any take on sort of China saying, because China chimed in, that we should have some talks. We should have some peace talks.
I don't want to say that I do or don't have a take on it. China, I think, is doing what's best for China right now, and that's about it. So from that perspective, sure, they want peace talks, but I don't necessarily have, whether that's right or not. I don't know.
Uh,
I mean,
Strat- Strategy Freeman goes back to how might a surprise 100 from the Bank of England impact the U.S. market?
that's a good question, strategy. I don't think it will bid up U.S. equities. As I've mentioned before, and the UK is actually one of them, current account deficits some of these countries run, they don't have enough US denominated assets to sell to pay for energy. So, this fall in crude oil that we just talked about is a good thing for US yields. But all these countries are importing a lot of inflation with the strong dollar. So I would say it's more of a two-tiered relationship. If 100 basis points strengthens the pound, that'll weaken the dollar, that will lower yields, and you can get a little equity rally on it. But I certainly wouldn't count on it to be something that's longer term.
Sashi and Mike, are you planning on a housing sector and REIT special event? I wasn't planning on it. Uh, unless something warrants it, but I was not planning on something that specific. Bob, any thoughts on commercial real estate?
No. Nothing. Well, that's a great question. It's just kind of outside of my. I can give you an opinion of what I think is going to happen to commercial real estate. I don't think it's going to be good, but it just kind of falls too close to personal advice. So no, I don't really have any. It's not. It's not an expertise of mine at all.
Anything else you want to touch on before we wrap it up with you, Bob?
No, I think we touched on kind of what I wanted to touch on. That Powell continues to try to tell you guys that they're serious. Coco's not listening, but I would advise the rest of you to listen. Coco, what color shirt tomorrow? Since I beat you up all the time, what color shirt you want tomorrow? Like, I can't figure out how to unhide the indicators on TradingView that I hid.
Unhide?
Yeah.
What do you on? You're on TradingView. Well, you
Yeah.
hit this little thing over here, this little eyeball thing, and so
Yeah,
you can do hide drawings, hide indicators, or hide position, hide all.
I must have deleted the things then rather than hid them. I thought I hid them. All right. That's it.
Mama Mia wants to know if you're bearish or bullish.
On what, Mia?
Just go with the stock market and the broad stock market.
Where's my brother? Is he here?
I
My
haven't,
brother been here? I don't know if
I
he's
haven't
been here.
seen him recently. Very disappointed, Bob.
John Iachino, are you in here or not?
A strategy wants to know what's the color of a margin call for your shirt.
It'll be black then. You got it, strategy. Black it is.
So, oh boy. Mama Mia wants to know the stock market. I mean, my take, I'll just give you my take. We're still going
Yeah.
to new lows below June. Everything says that.
So I'll put it this way. Waka Waka commented, by my view, Bob is bearish the stock market. I'll put it this way, Mama Mia. Mike and I don't really get bullish or bearish. If somebody said to me, what are you, crude oil? I'd say, well, I'm currently short crude oil, so I guess I'm bearish. But I look at it more like I'm in a trade, right? I've had people ask, actually, it's happened to both me and Mike when we're doing webinars together. Are you guys swing traders? Are you day traders? Are you long-term buy and hold? We trade patterns, and when the patterns end, they end. So this pattern held for 3 weeks. I guess I'm a swing trader. This one went to target in 1 day. I guess I'm a day trader. Um, I can think that the equity markets are going to retest the June lows, which if you've been in these things for a long time, Mamma Mia, you know both Mike and I have said that's the more likely probability, is that if we get a retest of those June lows. Then I guess within that context, I guess Waka Waka's right. I'm probably bearish, but I don't have a short equity position on. I don't. So I'm not really bullish or bearish. The bottom line is I don't really care which way it goes, other than if I have my choice, I'd rather it goes up because I know a lot of people are invested in stock market and I don't want to see their retirement get hurt. So that would be my choice. If the stock gods came to me and said, what do you always want to happen? I'd say up. And then I'd be Tom or Coco. But the stock gods have not asked me. So I hope that answers your question,
They
Mama
don't
Mia.
check in with you on an hourly basis?
I don't even know if they're real. I may be a stock god atheist. I'm not
Oh,
sure.
boy. Oh, boy. All
All
right,
right,
Mom Mia
black
says,
shirt
good
tomorrow for
point.
margin calls for strategy. That's what it's going to be on.
Yeah, Bob, you did say you were looking at an overall 44% decline, so we're not
Yep,
there yet.
we're not there yet.
So overall, you would be expecting more of a decline
Yeah, I did.
for a
And I just
long-term answer. That could change.
that was December when I said that. So, and that's not me patting myself on the back. It's quite the opposite. Um, I could certainly change that view now in terms of percentage, but I figure what the hell, it's out there. I'll just leave it. But that was just somebody saying to me, if the market falls, how far do you think it could fall? And I said, I think it has 45% in it. So it wasn't any sort of measured move off of a turn that may have happened in March. It wasn't any of that. It was just me looking at the rally and saying, well, this rally, I think we could retrace half of it. And the half point came into a little bit less, a little bit more than 45% from the highs. So that's why I picked it.
Coco. Coco says Bob is bullish because he's wearing a green shirt. Weren't you asked to wear?
Coco asked me to wear it. And now
Yes.
Strategy said, what's the margin call shirt? I'm going to have a black shirt on with a black jacket, black sunglasses, and black gloves.
For tomorrow?
Yeah, because you remember when they would come down the trading floor and pull guys off the floor.
Yeah.
I mean, they weren't dressed like that, but they should have been.
That was like the walk of shame, though. When you,
Oh, awful.
that's you couldn't get off that floor fast enough if you. It was like being
Yeah.
pulled off stage by the cane.
Oh, it's brutal. Brutal.
Trying to avoid all eye contact, they're like, "No, don't look at me."
Those were the bad old days.
Oh boy! So now it's not that you did. Now you just, hey, sort of the walk of shame would be the live stream goes dead.
So we're good, Jack.
During a live press conference. Okay, live stream's dead.
Coco just said if I wear a red shirt tomorrow, he'll be bullish. So you'll be exactly as you always are?
Yeah. What?
Okay,
All
I got to
right.
go.
And Waka Waka is looking for a total of 80% down, which, you know what? If we did that, I would literally back. That's when I would think of taking out loans to buy stocks.
Yeah, agreed.
That's
Agreed.
about the only time I'd think about doing that. Because if you go completely down, it doesn't matter anyways.
Right.
All right, we'll wrap it up.
All
We'll
right,
see you
guys.
tomorrow, Bob.
I'll be on tomorrow, so I'll see you
All right.
tomorrow. Bye.
I'm not going to run this. This is the third live stream today. Amit, I put that in the. Don't you watch the sector overview? Amit, you're not watching the sector overview. The long-term stuff. It didn't flip today. It flipped back on at the end of August. The long-term systems, or I call them medium to long, the major long-term ones I have never flipped, which I can't release because they're not mine to release. The other ones that we follow with the sectors and everything else flipped at the end of August to bearish again. And they've remained bearish. They didn't flip anything today. They flipped at the end of August. So 3 weeks ago. All right, let's just recap some stuff. Tomorrow, we have initial and continuing jobless claims. Their forecast slightly better, or forecast a little worse for initial, slightly better for continuing. We have the Consumer Board leading index, which is forecast at another contraction. I think that will be traded contrary. And then we have the Kansas City Fed, but not much else. So everything's early in the morning. Consumer Board, which we might get a little action off of it. Then don't forget one other thing. We got Powell speaking Friday afternoon again, which will clarify any mistakings from today's presser. But I think he left it pretty clear with sort of the drop the mic thing. I'm done. You know what? I'm not going to go down this path anymore. It's clear. We're going to keep hiking until inflation is directly on. When there's inflation is not going to surprise us anymore, and we're hitting 2%. Mega caps taking it in the shorts today. Your financials really getting hammered. Your banks, Walmart, and some consumer staples, which is a hiding ground, were the only things up. Walmart, based off of, they had comments the other day too that they're still seeing some consumer strength. That's about it with that. Still, of course, in negative gamma territory. We're now, where are we sitting? Below 3,800. Next levels to a downside. We'll do some recap again for tomorrow. Sitting at the end of this channel. 37.93 was that line. My next key line. We ended at the low of 37.92. Channel. So I will be watching for a slight relief bounce. A potential slight relief bounce. That's about it. We had that little, just to recap because I did that live stream, we got the little break above here, hitting some key targets, and then we just got momentum at the end of the presser to just take out the lows. I put on the harmonics here. I'll just show you again what I did. I took them off. And this stop reduction and take profit area. Right now, for overnight, I'm going to be watching the 1 hour rotation zone on any bounce back, and I'm watching again 38.28 to 38.38 on a bounce back move. But if we continue lower, and we already talked about the We got more hikes coming tonight. 37.72, and then remember we closed below 62.5 back on September 16th. We just took out the 75. We should see 37.25 at a bare minimum. Even after micro rallies, we should still see 37.25, and then in here is a potential bottoming area. I'd be watching that for a short-term potential bounce. I don't think we'll break it on the first thing, but then after we roll over, I'm then expecting still 35.56 at a minimum. NASDAQ, 11,694 was the next harmonic. Closing 11,668, so below that. My next key target area is 11,466 to 11,529. Keep in mind also for the NASCRAP, taking out the 75, we should still see 11,400. And I'm watching then for the bounce around the June lows, and then the June lows to get taken out at least to 10,734. And no, that's not my bottom. The Dow, I'm expecting to be the first one to really retest the June lows, by the way. That's the first one for the retest. And you see here, look at the 87.5. Low was 32.02, 87 was 30,215. This hit 30,202. So that's officially already ticked off the probabilities. And remember, that closed back below the 62.5 at the beginning of September. So the Dow has been leading stuff really lower. So it's ticked off the probabilities, but that does not mean the down move is over. Okay? Intermediate will be 30,050. Next significant is about 29.8, then 29,640. Watching for a short-term bounce down here, then the next rollover play. Then my next target, that's not the lows, next key target area is about 29.60. Russell, 1760, 1742 on any rally. Resistance is 1777 and then 1802. And if we do rally in the DAX tomorrow, 12,733. Watching for today's lows to get taken out, 12,471, then 12,368. Dollar index still watching for another push. The only thing, again, short term that'll take me to neutral is back below 109.05. And then the only thing that would make me bearish, at least in the, well, actually substantially bearish, because we'd probably be retesting the lows from August, would be a key close below the 13th of September's low, which would be 107.67. So that's where I'm going to have to give you a demerit on it. Sorry, you're getting a demerit. You're getting a red card. I'm not even going to give you a yellow card. I'm giving you a red card on it. I gave you my targets for tomorrow. We don't have a bottoming pattern, so even if we bounce overnight, I'm watching for some follow through tomorrow and just use my lower levels. There's so much I need to catch up on. Futures Ed sector overview from Sunday. You are welcome. Can you walk through your thought process on the initial move at 2 and then go back and watch? I don't want to recap all this. I gave my initial thoughts at 2, which is 1 Central. I think you mean 1 Central. I did that on the live stream. The reversal, then I thought the press conference was leaning towards the dovish side. I'll just give you my recap. And I said before I dropped, right before the press conference started, I was watching for this high area to get taken out. We did that. Then we had a lot of selling pressure up here, top of the channel. We couldn't sustain above 3,900. We got momentum, and then it was a breakdown play roughly below about 38.80 with the momentum play. So that's because the press conference got more and more hawkish. It was getting to the point where, all right, we're not kidding. If you still think we're kidding, we're not kidding. We're going to keep hiking. We're going to, yes, we're going to look at the data, but we're going to keep hiking and we're going to get rid of inflation. We're going to get rid of inflation. We're going to keep hiking. So get it through your thick skulls. We're going to keep hiking. And then you started getting the acceleration of the downside. And there's very little bid. When's the next CPI? It's in October. I'd have to look up the exact date. I think it's around the second week of October. So you have some room. Did you cover the dollar dump? We talked about the pullback at the back and forth with the presser. But I can't get overly bearish or even overly. The market rallied and then it reversed. And if you were talking the reversal at 2 Central, that was when it started to really, really, really get with the hawkish tone of, oh, we're not kidding. And so the dollar snapped back. I'm not seeing much in the supply chain constraints at this point. There's some stuff, but that's not the big thing. It's the embedded inflation, especially, remember, the supply chain stuff is getting solved. All right. It's more that we've got some embedded. The U.S. is a services economy now, and you have core wage inflation and services inflation that's getting baked in and not going away. It's why, even though Powell won't say it, they need a recession. They need job losses. We've talked about this. They need things to calm down. They need people to entrench. They need people to cut back. And naturally, that will also ease up anything else with the supply chain. People hunkering down. There's been too much money. Not only the Fed, but as Bob said, with all the stimulus. Not some with the initial stimulus, but in the totality of all the stimulus inserted into the economy with COVID. It's got to get out. So it was like that meme I put up earlier, the Drake meme. You know, they won't say recession, but it's this again. I'll put it up for anybody. What do they want? Oh, recession. Whoa, wow. Below growth trend. Yes. Or below growth trend. Hey, that can mean anything, can't it? We're just not growing as big. Hey, we could be in a recession. But we're not saying recession. We're saying below growth trend. Below growth trend is going to solve it. It's just how far below growth trend can it go? Didn't put a bottom level on that, did we? So, yes, people only got to hunker down when they ain't got, they're burning through the cash. Credit cards are going to go up. You know, and once they're going to start going up, it's going to get interesting, but it takes some time. There's a shortage of CO2 impacting beer production, then you got to switch to the hard stuff. I'm not talking drugs. I'm talking hard stuff. Like, yeah, you just go to whiskeys and bourbons. Or just breathe more. We need more CO2. Okay, I'll breathe more. Like all the make sure you kept me on the right side of the trade. Mike, oh, Mike, you kept me on the right side of the trade. I'm glad. Even on rallies, we're still watching for the rollover plays long term. There's no key bottom in sight. And as I've talked about, we won't be trying to buy the absolute bottom. We'll get signs that we might be bottoming. We'll get shorter term signs, and we'll eventually get into longer term signs. Don't be a hero. And that's, you know what? And if you're sitting in cash, I talked yesterday. What did I talk about? Especially now. Geez, look at, if you want to put some of your money at work, go into some of these short-term bills. Geez, look at some of these short-term bill rates that are going to be. I'm serious. Park your money, because savings doesn't pay anything. Park your money in some short-term treasuries. Waiting for the bottom. Or waiting for a decent bottom. Okay? I wasn't joking about that. I mean, you got your 3 month. Look at your 3 months. 3 months isn't that long, and you're not going to buy the low tick of the market anyways. And we haven't even started going. Remember, I talk about we're not anywhere back to that zero area. I start really watching for the market sell-off as we accelerate back above zero. So I'm going to get some warning, but until then, look, I'm looking at putting more into some, after this rate hike, which was today, I'm looking to roll some more into short-term treasuries. I can grab a federal tax, and I'm not giving you financial advice. Talk to your financial planner, talk to whatever, however you look at. I cannot do that because I'm not your financial planner, nor am I a financial planner. What I'm saying is if you're sitting on cash and you want to do some stuff with it, short-term treasuries. You can even go shorter than, because why? Look, we'll get some warning. You can stop rolling into short-term treasuries at some point. You can grab a halfway decent rate of return. You can also you can look to scale into some decent dividend paying stocks. I wouldn't go all in at once. And to generate some rate of return. Okay? I mean, this is where even Intel, this is a major support base. Intel, 5% dividend yield. So even if you're scaling in or doing cash secured puts, and if you get put, scale in. Again, no, I'm not trading or investing advice, but those are the kind of things you look for. Intel's not going anywhere. Intel, yes. Can it go lower? Yes. Earnings even at compression right now, it's sitting at 6.21. Selling off and evens with earnings compression, yeah. But, Intel's not going to zero and pays a decent dividend. You look for stuff like that. Look for short-term treasuries. Park some of your cash that you don't need. And look, when we get a longer, especially as I start seeing that acceleration back above zero with the yield curve, I'm going to start watching more for a major bottoming pattern. Therefore, then I don't need to roll as much money into short-term bills. All right? I can keep some more liquid and look to even get more aggressive at building longer-term core plays in key stocks. So it's a transition. It's not all or one. I think too many people are looking at the market as I'm either bullish or bearish, or I'm long or short. Well, you could be short some now. You can park some money in some key things, whether they be some long-term high dividend paying stocks that are getting closer to a bottom. They could be in putting it in some short term bills. And then look, hey, I don't need to keep rolling the money into short term bills. I can look to free up some money and then rolling back into some really good investments as we get closer to a bottom. I hope that makes sense. It's not like you're going to want to allocate money. It's not just like I'm either short the spiders or long the spiders. That's, or I'm short the Qs or long the Qs. I hope that makes sense. For what? Again, when you ask me, uh, do I know what symbols on IBK are? Are you talking about if I'm going into short-term bills? I use Treasury Direct. Are we close to a bottom? Not in my book yet. No. Simon Property Group pays a great dividend, but it's real estate. I just can't buy that now. And I would steer clear of some real estate plays and REIT plays. I would not be focusing, even though REIT plays have good dividends, I'd be paying attention to, you know, some key stocks. I mean, you got some major, and then when I'm saying key stocks, would I be going all in with a whole position on Intel? No. But you can do, and if you don't know about cash secured puts, maybe we'll do something on that at some point. But that's where it's really nice to, because if you don't get assigned, you can still get a return on your investment, even if you don't get assigned. If you do, you roll it into a longer term core play, and that's already the plan before you sell the cash put. Because, yeah, I'm looking, especially if this gets down. I think it would be a gift if Intel gets back to 20 or 21. But this is an area. So that's where I sit. It's, when you let it near capitulation, no, it's overdone. But again, things don't generally end. If you have, if the Fed comes in and says we're starting QE again, you can get the V-shaped reversal. All right, let me show you something back at 2000. Then I'm going to wrap this up. I'm just trying to give people an idea. All right. You don't get, look, you had the major tank, but let's say you started building. I'm not saying there's a direct correlation, but you see the support base, you got in there, you got some, so you're building a long-term position, you get some bounces, you can, markets might not be at the bottom, let me do some covered calls against it, generate some returns, finally reconnected with the 200 month, just below this base, but look, look how long it took then Intel. There are multiple plays here, but you're collecting a dividend yield. You got multiple chances to do secured puts and roll covered calls into it. Look at this base that was built over years. We might see that kind of thing again. We're at that first level. This first area, that's why I'm starting to watch the radar screen. I'm not expecting a V-shaped reversal. Starting to watch, let me take it back. Starting to watch the radar screen. Building a core position, and that can take times, but you can use this and you're collecting a dividend yield. And you're not putting it all in at once. It's not like, I just bought Intel, goodbye. No. Especially, you follow some stuff. I love when these things get the major down push moves come, because that's a great time to sell some cash secured puts. And then you either get the you either get a bottom forming, or hopefully you get put some of the stock. If not, you know, you collect it. And then you can do some stuff. You can even also buy it if you don't get put. But you can watch for key reversals like double bottom. You don't have to try to grab a low. Generally you get bases that are going to be built. I think we're going to have a lot more bases being built. I don't think this is going to be a V-shaped bottom. I think we're going to get more of the bottom like after the dot-com bust, rather than your bottoms that came recently. This was the Fed injecting money. I think we're done with the key money injection, at least for the time being, or unless things get horribly bad. And I'm not, you know what, do your own research. I'm just showing you things I'm looking for. Because I'd put Intel into a tech value play. So I'm looking at the area. Look, we're back closing in on that 200 month into an area. We're getting some of these key bottoming moves. Does that mean it has to be over? No. But if you're looking for something to put money potentially to work in this area, that would be something with more limited downside. Intel's not going to zero, and you're collecting a dividend, and you can trade around the core position. Other than that, again, look at some short-term treasuries. They're paying above 3%. Park some money. Remember, your average return. People are so used to juiced up stuff from the last few years. But remember, the average long-term rate of return, you in a bear market, you get returns above 3% with essentially risk-free returns, and you don't have to pay federal. You still have to pay state and local taxes, but you don't have to pay federal taxes on it. And your money is pretty much safe, unless the U.S. government's going away, and I don't think they're going away in the next few months. Because we'd have bigger things to worry about then. I'll take a secure investment that I don't have to worry about. And then you can get into things longer term. Again, just my 2 cents worth. Trying to help people out here with a different mindset. All right? Let me know if that makes sense. And I really like things that pay a dividend. Why? Because if you get further declines, it's offsetting the declines. And then if it just stays in the doldrums and you use some covered call strategies and some more secured put strategies, you can even juice up your returns. Yeah, I'm not things I know Alphabet was put in there. Why? Because here, I'm not willing to go in here. First off, not paying a dividend. P to E still at 18. This is not something I'm looking to build a core position in. I have no dividends to offset anything. P to E still too high. Does that mean we won't get bounces? Yeah, we'll get bounces. But I'm not looking to build a core position in it. That's the difference. I'll get more interested to do some more trading down around the 200 week. But I'm not looking to build a core position. You see the difference? There's a difference between building a core position on something that pays a dividend and a company that's not going away. Yeah, Google's not going away. PE's still too high for my taste, and it pays no dividend. So it could be a trading instrument. You get a little mini daily double bottom or 4-hour double bottom. Great, it's a trade. It's a trade only. It's not something to build a core position on. A Taiwan disaster will make a lot of chip companies have an issue, but Intel, they're still building some more chip plants. Yeah, it would affect them, and we start getting major military action towards. You got a lot of other chips that I would be worried about also going in that don't pay a dividend. That can easily get hammered. Now look at, all right, do you think I'm going to try to build a core position in NVIDIA or, all right, dividend yield 0.12%, P/E ratio 43. What do you think is going to get hammered more? Just saying. Yeah, and it's, yeah, well, they've got more potential growth. Yes, however, they have a lot more risk. AMD, not looking to build any kind of core position in AMD. That's old. Yet. No dividend. And I'm not talking about trades. There will be trades in NVIDIA, and although, we got to get that SMH to really get down a little more. No dividend, P/E still 31. You think I want to build a core position in this? No. There'll be trades in it. Again, Microsoft will be another play at a key level. Is it yet? No. Microsoft, I need, as the P/E and price comes down, we'll get the PE to come down, the dividend yield to go up, and then it will be in the same boat as an Intel. Is it there yet? No. Not in my book. Will it be at some point? Most likely. Look at the zone I just marked off. We still have a major topping pattern that's playing out in Microsoft. Look at the targets. Look where the 200 week is. Look at the zone I just marked off. Where do you think I'm going to be more looking at a Microsoft? There you go. Until then, I don't need to be, this is not what I'm looking to build a core on. This is how you combine your technicals, your analysis. And look, I'd rather miss a trade than get in a bad trade. Or I'd rather miss an investment. There'll always be another entry. But also, we're going to see more after it's barely here. You can barely see it. Here. After the .com bust, look how long you had Microsoft trade. You got multiple times to get in Microsoft for long-term positions. It took a while to build a base. I think we're going to see more of that again after this market's done. We're not just going to see a V-shaped reversal. We're going to see more of a long-term bottoming process. Just my thoughts. Look, and if they keep hiking, you can keep rolling your money into short-term bills, which will really put a kibosh on the growth narrative for growth stocks and really contract PE ratios, and will have a significant earnings compression. Yeah, you longer term for the S&P. My next major, I think after we break June lows, we'll get at least a bounce around 35.60 area, 35.70. Then I'm watching for a more substantial bottom around 3,500. If we break that, my longer term levels, 31.58 and 28. And those are my longer term. And that I'll start target depending on where we are once we start getting that yield curve acceleration back and above zero. That's when I'll fine tune those levels. With that, I've gone on way too long. Thank you, everyone, for being here. I shall talk to everyone later. Thanks for everyone new turning in and new tuning in. By the way, if you like this stuff and you want to know some more stuff we do, whether it be short-term trades, whether it be long-term investment ideas, please consider subscribing and supporting the channel. Leave some comments. Again, thank you for everyone new here. I really appreciate you spending some time in your day. People who tuned into all 3 live streams today, thank you very much. With that, I will be back in the chair tomorrow, 8 a.m. Central Time, to help us fine-tune our levels for tomorrow. You're welcome, Ted.